Hi everybody, my name is Adam Meyer. I am back here with another video, and I want to provide value with these videos so we can expect what can happen in the market, so we can take our knowledge, look at the fundamentals, look at the technicals, and then basically anticipate how we can go and make money in the market. I'm doing that personally. I cannot give financial advice, so do not take any of this as financial advice. This is just education from what I know and what I've studied myself. In the beginning of these videos, I want to go over fundamentals of what we're seeing in the economy. For example, right now, the banks and also the Fed with the interest rates, we're kind of in an uncertain market. And then at the end of the videos, I want to go over the trading review. So if you want to fast forward, just see the trading review, go for that. But that's how I'm going to do that right now in the time being, and then we can see what happens from there. So let's get into it here. All right, on an article here on Wall Street Journal, they basically said that investors did not think this was possible. They also say to stick with like higher quality companies that are within the credit market. So that can be a company that takes on government debt. And recent projections from the Fed officials also expect a 5.1% on the federal funds rate. And right now they're currently in the 4.75 to 5% range. So if we're not expecting higher, and we're actually expecting lower rates soon, so that's why we could expect these markets to go up. So there was no bad news with the banks that are out, and the Fed had no crazy reason to raise rates to 5, 10, 20, 30%. Like, that's not going to happen. So we're not going to get pull Volcker like what happened back in the 80s. So that's kind of why the market went up. This is just all on a fundamental level. Another reason here is that Wall Street, once again, grown more confident that the Fed will be cutting rates as soon as the second half. So if they realize, oh, okay, inflation's really coming down, we are going to cut rates in the second half of the year and not really go all year round. This is actually a bullish catalyst for the market to continue to go higher. So I'm going to go over here to the market based on what I can project going forward. We have the S&P over here on the left and the NASDAQ on the right. As you can see here, the S&P 500, we are kind of curving off here at the bottom. We are showing signs of bullishness coming into the end of this month here. Weekly time frame, we are hitting our weekly targets that are up within this range. And just from the monthly time frame, we got to see where's the liquidity at. What can we expect going forward? So if we have banks not making really bad moves, so like if banks are not going under and then the Fed has no reason to really raise interest rates like crazy, but those interest rates going up could make the banks fall under, but the banks might not fall under for a few weeks, few months, or they may never fall over. So that's also something we got to keep in mind when looking at this as well. And there's also talks about the dollar going under and like people moving away from the dollar. That's been happening for years. So like it's just noise to me at this point, but it's something to be aware of as an investor, as a trader. So keep your eyes open for that. But for projections that I'm looking at here, not financial advice, but I'm looking at possibly up above this high. There's a lot of stops up here, up above here. And then once we get up above this area, if we get up above this area, I should say, I'm going to be looking for a consolidation. We'll see what's happening in the economy at that point. Because if banks are falling apart and inflation continues to go higher, which is possible, then the Fed has to raise rates. There's more uncertainty. It's a whole bunch of shit again. So then the markets could just completely tank and come back down to the pre-COVID levels over here. But in the medium-term time frames, I'm going to expect price to basically consolidate right here in the next week because we have NFP next week as well with news on Friday. So with the payroll news, I'm going to be looking for big movement. Depends on whatever the chart shows at that point. If I'm bullish, this is the target up here. If I'm bearish, probably down back into the highs over here from where this bullish breaker was formed within this area. So I'll be looking down within this area if it is bearish, but if it's bullish, I'm looking up above these highs, or basically if it creates a range next week in the early part of the week, then I'm going to be looking for liquidity to be taken out on both sides. So we'll see what happens there. All right, so these were the targets that I talked about in my group chat. So if you want to go look at my Twitter, you can go see these targets that we were talking about all week long, and even on the other videos on my YouTube. We were talking about this all week long. So we had this gap here that acted as a form of support. We had the 2-day volume imbalance that was here that we rejected right off of. Is pretty much bookwork. Had these eyes up here, basically if price was going to reach up there or not. After this bullish dildo candle, I mentioned yesterday that these bullish dildo candles were going to possibly be a catalyst to launch price up into there, and then we were going to look here into the SIBI to be another possible catalyst for a bounce up into this area, which it did hit up there. So if you want to go back and rewatch those just to see how that played out, then maybe you can backtest it yourself. Don't be lazy, just want to backtest and grow and learn. So that's the only way that I'm making it happen. But anyways, today we're going to get into the trading review of what actually happened here today. So we had price come down here during London session, and then I was looking at price within the NDOG here. So the NDOG is the new day opening gap. The NWOG is a new week opening gap. So it's basically the gap between the day and the weeks. So I went over that in the last video too if you need those concepts, go for it. Getting down to this area, we basically came down here, we moved up higher, and then we started closing bullish here in the morning. And this bullish movement made me keep my eyes on this high up here and the 50% of the daily wick that was right here. So the CE of the daily wick is consequent encroachment of the daily wick, which was right here. So I wanted to have my eyes on that area. I know ICT was on his live stream. He was looking for the short. He got stopped out on that. Props to him though, but the short was not my position. I took the long on this trade. It was a very choppy market in the morning though. So I want to keep that in mind. But the one candle that made me want to go bullish. So I had my buy side targets up here, and then down lower, I had my sell side targets. That's if we were to reach down here and down below these lows. That's if we were to get down there. But I did not see the lows happening, so I was really just focusing on the candles and on my models. So what did this candle tell me? You see this 15-minute candle right here? This bullish dildo candle? This one right here was going to be the catalyst for me to get up into this area. And once I saw that bullish dildo candle, I was like, green light, we are going to show signs of going higher. So once that closed, I looked at this area. We are now in the 1050 to 1110 macro. And if you wanted to write that macro down, 1050 to 1110, then we have another one from 1150 to 1210. There's another entry up here, but I walked away at this point to go work on my other business. But took the buys within this area, and I took partials based on the chop. So another confirmation I had here, I know ICT was shorting in this 1 minute gap that we have here on the 1 minute right here. So he was shorting in the 1 minute right here, but I did not take that trade. I did not see any clear breaker structure. There was SMT divergence. I see why he was shorting it, but I was looking for a deeper low, and then if we get back up in, and then another accumulation down, so we could possibly come down here, come down into this gap. These were clear targets if it was to go short. This was just not a short for me, and we closed bullish within here. The 2 minute candle closed within here, and once we saw that, I noticed these volume imbalances right here. And then once we rejected that area, I was in. And then we retested the high of this on the 1 minute right here. And then boom, traded up within that area. And then I used the fib extension tool here. I measured the swing here on the 1 minute bodies because of just all the chop. Like, this is garbage price action. If you like this at market open or after market open, dude, I don't know what you're doing, bro. Like that was just chop. That was like, okay, let's not really do much. And then your heart's probably pounding when you see this candle come in. Like, oh my God, it's moving. I'm missing the move. No, you're not. You're not. You need to know what to look for, you know? You're not missing the move on that one move up. It's starting to set up for a move. It's creating movement to set up. We're getting back over here. The entries within this area. I was not looking lower. My stop loss was at 50% of this area. I can even bring over. So over here in my Discord, I mentioned this early in the morning that we were going to hit this area. Within there, around 1044, we're going to hit 41.19, which it did end up hitting later on in the day, which was higher up within this range that was up there. But our entries and everything were down lower. These were my entries, and then here we go. These are the entries then here, taking up into there. That was the range that was created to get price up in that area. It came down, but then we had our stop loss at 50% of the 5 minute wick, as you can tell. And then our entries were right here, and then on the retest of the inverted gap. And then I took half off this position. That was the thing. So much chop. It was out of the macro. It was just after 11:10. Took half off. I was going to accept the risk. So I had a full % risk on this trade. And then I took off 0.5% once it started chopping around. Okay. And then the rest of the trade went up to hit TP up within the areas. But that's part of my rules, and I've learned that obviously from ICT. It's like when you price is not respecting your areas and it's chopped and it's already crappy conditions, then it's likely to do its thing. Plus, I was already on the live stream listening to him. I just not like the conditions after it looked pretty good here. I wanted to see it lift off before 11:10, but it lifted off afterwards. But anyways, targets were hit. Learned it was a good day. It was a profitable day. I know people that took the short here and got completely wrecked, but that's not me. That was me a while ago. I used to take crap like that. Now I know what I need to look for and what I need to do. But that was it going there. I'm going to go back over to the chart and show you another model that you could have possibly entered on. This is not financial advice, but we saw a price move up, consolidated here. And notice this. I'm going to bring over the 3 charts. Notice this. What do you notice? So if you want to, let's find the area where it was this morning before it lifted off. So it was right within here. Here was my buy right here, and then we had this other area right here. Do you notice anything between Dow and ES. Do you know anything? Pause it. Pause it. Okay, I'm going to get into it right now. So we have making lower low, lower low, lower low, lower low. This is making a low, a higher low, a higher low. Oh my God, that's something we talk about every day. It's almost in all my trades. SMT divergence. Smart money technique divergence. So we have lower lows and the higher lows. We're already bullish. We have bullish targets up towards this area within here and up within here. And that's where we're going. So what do we see? We see a break higher, and then we see a volume imbalance right here. On the 2-minute time frame, what do we see? 2-minute time frame, what do we see? Okay, we got this gap here. We have a bullish closure here on the 2-minute. We have a down close candle order block. You can even measure 50%. I don't know if this hit 50%. No, I didn't quite hit it. But anyways, those are the other confirmations on here. There's no reason that, for me personally, no reason if I was on the charts to take this buy within the 1150 to 1210 macro. There was no reason to. Not to. So buy here, partials, rest off. Right there, clear as day. Why would we take some off right there? Go to the daily time frame. Where's the liquidity at, baby? It's right at these highs, right there. Okay, that's what we were mentioning in the Discord. In the Discord, like I just showed you, it was over here at 1044, right before my entry that I took price up into this area. Well, not all the way up. I took it to right here at the -1 standard deviation from the 1-minute range. So if you want to see that real quick, why I did that, we had our fake move down, and I measured the body from here to here, and I wanted to get that range to be just for an extension for the algorithm to take me to that area. So it did come right here, and then it chilled out. So that range right there, and you can even tell this range. You go down here to the 1 minute. Notice how it just, the bodies of this close on that, and then the wick tapped here, the bodies close here. It's an algorithmic level based on this Judas swing range from 1050. So if you don't think there's an algorithm, just look at that. Look at that and backtest it. It happens over and over and over again. Anyways, I'm going to wrap this up here. Let me know if you guys have any questions. Take it easy. Love y'all. Peace out.